Hi guys, welcome to Boss Solutions. This is the trade analysis video on the trades that I've taken on October 3rd. This video is shot on October 6th, so I cannot show the screenshot of the trades that I've taken. Because since I lost money on this particular trade, I thought of explaining this trades because there is a good learning thing in this particular trade that I've taken. So to start with, you can see the previous day there was a very good up move. So the first thing that has to be noted, and then you can see a bit of correction on the end of the previous day. The October 3rd also, you can see there was a downtrend. The price was moving lower, and what I noticed was this level where possibly the Nifty can take a support. And the second thing was I saw this particular wedge pattern. So I drew this wedge pattern. I was waiting for a breakout. As I expected, there was a breakout and there was a volume, and I entered. As you can see, it didn't go as per my analysis, and I exited somewhere here with a small stop loss. The mistake that I did here, these kind of steep wedge patterns usually not work because you can see the pressure of you can see selling pressure right here as well as here. When there is a good momentum selling in the wedge pattern, downward wedge pattern, the probability of very high momentum reversal from here is very low. Since because there are sellers active here and here with what I can say with huge volume, and also the pattern is also very steep. In these scenarios, the one thing is you have to wait for another confirmation or some consolidation, or better not to trade this particular scenarios. Or if in case the pattern was something like this, which is not steep, I think this was okay, but here you can see since it is very steep, the pressure of sellers is high in this particular pattern, and the probability was less, and I didn't observe it, and I lost in this particular trade. Second trade was obviously when you see the selling pressure here, you think the stock may go lower. So what I thought, I drew a pattern very it was kind of similar to the triangle, but still, obviously, I entered somewhere here with expectations of price moving very lower, and I got some profit. But what I did was, what the mistake I did was, you can see if you really see there is some selling momentum right over here as well as here. It shouldn't take this much of time to give a breakdown, because if in case the sellers are very active, as soon as some retracement from here itself, they should have been come lower. This much of consolidation over a very long period, what basically signals it what basically it signals is there is an shortage of sellers, or the sellers are not interested, or maybe sellers are exhausted. So I didn't get this particular point. I didn't analyze in such a way. So I thought there is selling pressure and there is a consolidation. If it's a breakout, the price may go lower. I didn't observe this and I lost the money. So it was a logical trade, but I was unable to capture this kind of analysis on that particular day. The second mistake what I did in this particular second trade was, you can see a beautiful pattern here. This is a very good pattern. The wedge pattern, which basically everyone trades. I didn't observe this pattern. I couldn't figure it out on the time I was trading, and you can see so beautifully it tried to break it out, came down, small retracement, break it out with volumes. So this should where you would have entered if in case I had saw this pattern, and obviously my target would be somewhere at these levels. So stop loss would be somewhere here. So the first mistake is don't trade very steep wedge patterns, and if the selling pressure is very high in the pattern, don't try to take a buy trade. If there is a very good buying pressure in the pattern, don't take a selling trade. If in case you're expecting a very big downward move, and if it's taking a too much time to give a downward breakout, there are two possibilities. One thing is the sellers would have exhausted. The second thing is basically where there could be a very good down move on the downside, but the probability of that happening is very low. So second trade is okay. That is an acceptable mistake that I've done. The first mistake that I've done in the first trade has to be avoided. And third thing is try to see a pattern very closely that you don't miss out the patterns. Sorry, try to look at the chart so closely that you don't miss out the patterns. If in case I saw this pattern on that day, I would have not missed that trade and I would have made some money. These are the trades that I took on October 3rd, and I lost around 2 to 3% of my capital. Thank you.